Hello, you're watching Proactive London. I'm joined today by Dr. Mark Payton. He's the CEO of Mercia Asset Management. Mark, very good to speak with you this morning. And you're out with your full year 2024 results in a year that you characterized as being filled with market volatility, high inflation and interest rates, geopolitical uncertainty, and also that short-lived recession. And yet you've reported record organic growth, Mark. How did you achieve that?
Yeah, and good morning. Yeah, I think every business owner will look back on the last 2, 3, 5 years and think, what else could come our way? And in short and flippantly, we achieved that by a very strong and dedicated team in an environment where we are flourishing. And by flourishing, as an asset manager, it's about funds inflow in an environment where many asset managers are reporting net funds outflows. And the reason why we've secured funds inflows across institutional, retail, and British Business Bank is frankly track record and performance. So how we've achieved that is not, it's that classic thing, the overnight success that's taken 10 years to build. Is we've been on the market for 10 years, we're now delivering exits, we're delivering track record, and we're delivering capital out across the regions. Over 90% of what we've invested is outside of London. We're firmly a domestic investor. We're firmly here to continue to grow that.
Mark, you highlight your diversified and differentiated approach. Could you briefly explain that?
Yeah, so most of our capital is in what we would call sort of the strategic assets of venture, private equity, and debt, and we set those up on the sub brands of Mercia Ventures, Mercia Debt, and Mercia Private Equity. Following the acquisition relatively recently of Frontier Development Capital, we've also moved into sort of what we call intermediary real assets. So we're starting to move into real assets, be it social housing, infrastructure plays, brownfield regeneration, etc. So that broad church spread across different asset classes gives us that differentiated approach, not just in terms of investment activity, but also in terms of asset classes under management. And I think that's really important when you're going through cyclical variations. Venture, for instance, at the moment is a challenging environment for all, but venture is a part of our business rather than our entirety of our business. And I do think that differentiated approach gives you the ability to scale different parts of the business, but also to look at, on a distribution basis, different pools of capital.
Mark, can you take us through some of the financial highlights of the year? Because you reported growth in revenue, growth in EBITDA, adjusted operating profits also up, and you've also raised your proposed final dividend.
Yeah, absolutely. These are a very strong set of results for us, our best results so far as we continue momentum and growth, but also what we term the natural evolution of the business. And just to sort of put that in context before I go into the results a little bit more, but you can see what's driving the results in that respect is when we listed back in 2014 on AIM, we had approximately 23 million in third-party funds under management, exclusively actually in Enterprise Investment Scheme, EIS, and our net assets were 81 million. And you roll forwards now to these results, net assets at 189 million, so it's grown. But funds under management have grown from 23 million to 1.6 billion. And that is what's driving our growth. That is what's driving our revenue and our earnings. It's a cash generative activity as well. So it's driving the cash within the group. And coupled with our balance sheet, we had what really isn't highlighted from what you've just said is we had an excellent realization. nDreams sold to a business called Aonic for 30 million, and over 26 of that was cash back onto us. And we've got a small equity stake now in Aonic, a business in itself turning over 100 million euros and making something like 25 million EBITDA in itself. So we have a small equity stake in a growing business. But that underlying third-party funds is what's driving the business forward. That's what's driven the revenue growth of 17.6% and the commensurate EBITDA growth again up 6.7% to 5.5 million. And it's the cash generative nature of the business that means that we can continue on this progressive dividend policy. And again, the dividend's up circa 4% at this period compared to last year. So very strong in that regard, and liquidity as well, I think is something that should come out in these results. We've got 46.9 million cash on hand. And just to remind everybody, we have a hybrid model which comprises of balance sheet direct investments and which is approximately 117 million of the net asset value, but also our third-party funds. And within the balance sheet over the next 3 years, we estimate a need of about 25 million. So there's a 25. So if you've got 47 million, give or take, cash on hand on the balance sheet, you have adequate capital to support that portfolio for the foreseeable future. And then look at our third-party funds. There is 666 million of unrestricted cash across those funds. And another way of looking at this, if we step back and say, all this turmoil hasn't finished and we've still got turmoil ahead of us. If Mercia raised no new funds and we carried on investing at the same rate in new businesses and existing portfolio, we have a 3-year runway of cash here. Now, of course, we will raise new funds. And actually, I expect a period of stability now that we're all facing, thank goodness. So I think we're in a very strong position, as these results say, as we face our next 3-year strategic plan.
And I mean, you continue to win new mandates during the period. So 3 new British Business Bank mandates. Can you comment on that, please, Mark?
Yeah, and so back to the sort of distribution position of Mercia, we focus, as I said, on institutional, which is predominantly sort of local pension government scheme, capital pension funds. We've got British Business Bank, as you just rightly pointed out, and retail. And if I just flow through those and pick up on the BBB, all 3 have been important to us and will be important to us going forwards. Retail through EIS and VCT, we've had record fundraisers across the group there, and that's happened in this period. Institutional, that's been coming into the real asset position that I mentioned about at the moment, and we have ongoing fundraising in there. And then British Business Bank, we were successful in a competitive process in securing £360 million within the Midlands and the north of England in venture and in debt. So all 3 pools of capital have provided inflows to Mercia, giving us a record circa 600 million of funds inflow for this reported period.
Mark, you mentioned those 3-year targets, and amongst those, you aim to raise your assets under management to £3 billion and also double your EBITDA. So assets under management, 1.82 billion at the end of the period. How are you going to drive it up to 3 billion?
Yeah, and it will be, if you look back at our history, we've been growing at over 100% every 3 years. So this natural evolution language just talks to the trajectory of growth that we have benefited from historical periods. And if you then look back, every circa 3 years, we're acquiring a business. That business often delivers the same amount of organic funds growth as we acquired in the first place. That's really important to us. And we're seeing that with FDC at the moment. And so that move from circa 1.8 to 3 will be a combination of acquisitions as well as organic growth. It's a stretch target. These are never easy targets, but we have sight on how we can move in that direction.
We're already a quarter way through the new financial year, Mark. How's it looking so far?
Yeah, it's looking good. It's looking very good. So in terms of business performance, I look at business performance in terms of, we have this sort of vision of being first choice for investees, investors, employees. So that's how I judge things. Investees in a market of limited liquidity, our origination has never been as strong as it is at the moment across all our asset classes. So incoming approaches for investment, both in terms of quantity and quality, are growing, and that's a big positive. Investors, we continue to raise capital across those 3 pools of distribution. So again, that's looking very favorable going forwards. And employees, we have an excellent team here at Mercia. We have grown the team to meet the new capital, 140 of us now across 11 offices across the UK. And we are well set with systems and capability to meet that growth aspiration.
Mark, I hope you'll keep us updated on any progress. Thank you very much for speaking with us today.
It's been an absolute pleasure. Thank you very much.
That's Dr. Mark Payton. He's the CEO of Mercia Asset Management.